So stocks ended higher today. Stock markets hitting another record high, so touching record highs during the day as well. The flavor of the earnings season is, of course, AI, which my next guest says is monetizing at scale today and poised to grow even more. Nick Mersch joins us now, portfolio manager at Purpose Investments. Thanks for coming in.
Thanks so much.
It does seem like AI is kind of everywhere at this point. Amazon now saying it is going to expand grocery delivery.
That's right.
Do they already do this in certain markets? And if so, how big of an expansion are they looking at?
Yeah, that's right. And I think this is more just Amazon really building out their moat even more. And if you think about how they started, they always wanted to be the everything store. And we've had a lot of companies come to market and really struggle with this sort of grocery category because you need to have these same-day platforms. But what what Amazon did over this kind of post-COVID and during COVID period is really expand their footprint in order to their capacity for their distribution centers. Now they're bundling this in grocery and going after that category. So this is going to be a very big competition with the players like Instacart and Walmart Plus. And essentially what they're doing is providing more lock-in for those players to have that Amazon Prime subscription. And really what they're doing is the faster you ship, the faster people can buy. So that's really increasing a lot of their product volumes there. And on top of that, this is really the perfect solution for these AI optimization problems. Because when you have so many different nodes and such complicated logistic problems, what you really have to do is optimize this. And AI is a great use case to do that. And on top of that, if somebody else tries to catch these guys, they got to use AWS, Microsoft's or Amazon's cloud business, in order to optimize on their back end as well.
Interesting. So it's almost at the point, and you always feel bad when you order that like one small thing from Amazon, and they have to come to your door just to deliver that one small thing. But it sounds like that's going to be even more so. Bring me a tomato. Okay, so Amazon was a gainer today, but Coreweave, which is backed by NVIDIA, is not. So what happened there?
Yeah, I think Coreweave is one of the most contentious stocks in the market right now. And they really had this super hot period. And even though they came out, they IPO'd, the stock traded off significantly. It then was up about 4.5 times from the IPO price. And what really happened here was they had a pretty small float and then everybody coming into the market and everybody getting super excited about this stock. And they did come out with earnings, and what they did is really they didn't clear this very high bar that was set for them. So when you think about Coreweave's business, what we have is a rapidly depreciating asset because they buy the GPUs from NVIDIA and essentially rent them out. But when NVIDIA is putting product cycles out every about year and a half, that's a rapidly depreciating asset on their balance sheet. They've also got a massive load of debt and a lot of debt to serve at the same time. However, on the other side, they have massive revenue explosion and growth there. So they've signed up major contracts with Microsoft because Microsoft can't keep up from a capacity perspective in terms of onboarding this AI. They've also signed a big deal with OpenAI with around $12 billion, and they added $4 billion in this quarter in terms of the revenue agreements going forward. But what people are starting to worry about is that debt load, and then also if they can finally master the unit economics. Additionally, what people really have to watch out for here too is tomorrow at 4 p.m., there's a massive lockup coming up on shares that were locked up in the IPO period, and that lockup is coming up tomorrow after close. So really, although the stock was volatile today, wait for Thursday and Friday to see how this trades.
Okay, let's talk about AI turning a corner, because we talked about build out and CapEx spend and everybody sort of plowing into that. But do you now see it feeding to where we are seeing top and bottom lines gaining?
Yeah, so I think there's this very important concept that's ROAI, so return on artificial intelligence. And we've seen these gangbuster headlines in terms of, okay, Meta's building a Manhattan-sized data center, and everybody knew how much this CapEx was coming through, but estimates were still too low. Because if you look at the CapEx number growth in terms of what was anticipated, so forecasts were 51% growth for 2025. Now, after this recent period, they're 72% year-over-year growth. So the street was still too low in 2025, and I think they're still too low in 2026. So the first reason is that I think if you just think through these problems, a lot more reasoning models are coming out. So GPT-5 just got released, and people didn't really know how to direct their queries to the reasoning side of that model. And whenever you have a reasoning model, that's just more thinking, more tokens on the back end, more compute. And the other is if you look at sort of the capacity offtakes from some of these major providers. So they don't all provide it, but Google has these offtake agreements in terms of the energy that they have to contract in order to power these data centers. And if you do the math behind what Google is contracting from an energy perspective, the CapEx numbers for 2026 are still too low. So I think we've still got a lot of room to run here in terms of these use cases are just taking off. Reasoning, you need a lot more compute for it, and design capacity from large players like Google in the ecosystem.
I thought reasoning didn't take as much power as initially when they were just beginning to take everything in.
So the training run is a very high sort of upfront cost of the model.
Sure.
And what we saw in the early days is where people were competing in terms of one-upping each other from all these AI benchmarks. So you had OpenAI, you had Anthropic, you had Google, you've got now XAI with Grok, and all these companies from the large language models, so the foundation models, what they were trying to do is really beat each other on the benchmarks and really push this product out. Now what we're seeing is the benefits of training in terms of how long you spend on each individual run. These benefits are starting to plateau. And now what we get are these AI agents and all these deployments that are actually in the workforce that are very, very useful. And so what we're seeing over time is the compute shift from very, very training heavy to more on the inference side. So we're seeing this gradual sliding scale where the percentage is moving across from training heavy towards inference, which is where that reasoning models really pick up.
Okay, it's interesting. I'd love to know what the data is on the AI that's already in use and whether it's been successful or just marked as successful, right? Somebody has to dig into the numbers. Let's talk about NVIDIA and AMD saying to Washington, hey, here's 15% of our revenue so that we can go sell in China.
Yep.
What do you think of that agreement and what it could mean for others in tech?
Yeah, and I think that when you look at this 15%, I think that's a direct margin hit on the NVIDIA front. But what you also have to consider here is the other end of that. Because back a while ago, a couple months ago, NVIDIA wrote off that huge chunk, almost $5 billion, in the inventory to zero. So what you have here is these are now getting put back online in terms of this is now a new avenue that they can sell into. And what we're finding with a lot of these tariffs and these export license restrictions is that Trump is proving to be extremely transactive in it. So he's really favoring a lot of the companies and countries that can provide direct investment into the U.S. ecosystem. So NVIDIA, for instance, promised $500 billion over the next 4 years when it comes to manufacturing capacities getting built out in the U.S. If you go to his headline shock, he said, okay, we're going to put 100% tariffs on semiconductors. And this was a massive sticker shock across the entire industry. But what ends up happening is you get a TSMC. And TSMC is very vital for this infrastructure layer because they built the fabrication system, which is incredibly difficult, incredibly technically complex. And what ends up happening is because they're investing in a facility in Arizona, they now get an exemption on that. So some people are saying, hey, look, we're going to get some tariffs on this. But when you look at the total cost of AI implementation on the infrastructure side, after these tariffs, it's a low single-digit % because of all these work-throughs. Final racks are assembled in Mexico, which are exempt under USMCA. So there's a lot of these nuances with these tariffs that are coming out that are actually much less harmful than people originally projected.
But it makes the reasoning nonsensical, right? Security concerns. You can't sell because it's security. Okay, 100%. Give us some money and then you can sell it. All right.
Very transactive.
Nick Mersch, thank you for that. Nick's the portfolio manager at Purpose Investment.